Hi, this is your Cabot Weekly Video Review. I'm Paul Goodwin, the editor of the Cabot China and Emerging Markets Report. As you can see from the chart here, the S&P 500 has had a good week, not a great week, but it's a good illustration of how the markets actually work. The January correction that ended on February 5th or 6th pulled the market, the index back below its 25 and 50-day moving averages, which a lot of people thought that the world was coming to an end then, but of course all it did really was recharge the index and give people who look at value a chance to move back into the market. So what we have now is what I would call a highly reactive market, which is to say a market where people are worried, but looking out 6 months or so, they believe that the economy is going to be better than it is now. So they are moving money into the market, but a bad piece of news will move the market lower much more than a good piece will move it up. So yesterday's SAP data that seemed to indicate that unemployment numbers, or that employment the numbers were not good. Actually, when we got the news today that employment was relatively good, the market moved a little more down yesterday than it did up today. So that's just the way things go, but the general trend is up, and as we can see, the index is back above all of its moving averages, and that's true of all of our market timing indicators. So I have a couple of stocks for you to take a look at here. Let's see. This is actually the Halter USX China Index, which is an index of Chinese stocks that trade on U.S. exchanges as American depository shares. It's the basis of the Cabot China and Emerging Markets China Timer. And what we see here is that it had the same kind of correction in January and February that the market did, moved back, and then notice this move right here as the index moves down, just tags its 25-day moving average, and then gets moving again. This is what I think of as characteristic of a healthy market. A market that goes up all the time is very soon going to burn through all of its buyers, and there won't be any reason left for people to come in. So this is what I think of as a very good chart. Move back to Wanda here, and we'll take a look at a couple of stocks I have on my own personal watch list. This one is Turkcell. It's a Turkish cellular phone company, and it had the usual correction, and now it's trying to build a relatively flat base along here, and you can see it looks to be working pretty well. We've had some relatively high volume support here, and there's going to be a lot of overhead, people who own the stock at this level and at this level. But as Europe's economy lags out of the US, Turkey has been hit by this, and as soon as Europe healthies up again, I think Turkcell is going to be one to watch. Another that I like is Sociedad Quimica Y Minera. Basically, it's the Chilean mining and minerals company. This is people think of this as primarily a specialty fertilizer company because many of its mineral compounds are especially good for growing specialty crops like fruits and certain kinds of vegetables. The wild card here is they also have a significant portion of the world's lithium reserves, and you will not find a tighter set of bases than these. And what this indicates is that every time the stock goes down to a certain level, there's somebody ready to buy it, which indicates a good deal of institutional support and accumulation. So that's a couple of stocks I have on my watch list. That's all for this week, and I'll see you here again soon. Thanks.